Investors are regaining confidence in the consumer following a strong retail sales print this morning. That's up 1% month over month. And after Walmart reported a beat and raise quarter, Tapestry also reporting solid results with sales powered by Coach. But the picture isn't as clear across the full consumer landscape. Take department store Dillard's. Reported weak quarterly results today. A shopper struggled with high prices. Starbucks earnings were well below estimates. The company noted a 3% same-store sales decline. And hospitality industries facing real challenges as well. Airbnb, for example, giving poor guidance this earnings season. So joining us now with his read on the consumer is former chair and CEO of Saks, Steve Sadove. Steve, it's great to have you on, and I'm going to start right there. Key question, are consumers spending less or are they just spending differently?
I think the answer is they're spending differently. They are spending a bit less in nominal dollars, but that's because inflation has come down. If you looked at the beginning of last year, the consumer was growing at about 7%, but the inflation rate was at 7%. Today, you saw a print that was about a little less than 3% versus a year ago, but we saw an inflation print that was 3%. So what's happening is the consumer is spending at about the rate of inflation, but they are spending differently. You've seen the shift to experiences. You're starting to see a shift back away from restaurants. We're killing it relative to at home. Now you're starting to see groceries coming back relative to restaurants. They're sort of converging. So I think you're seeing different behaviors as opposed to a fundamental shift in the consumer strength.
So we know we were talking a lot about things like revenge travel. You just mentioned experiences, people eating out at restaurants. Are we at a place where we can say we're normalizing post-pandemic now with behaviors and consumption?
I would say we're reverting to the norm. We haven't totally reverted. So, for example, in categories like home improvement, where you had a big win during the pandemic, and you've seen the Home Depots of the world that have been suffering at furniture stores during this period, they're being affected by the housing market and the lack of high mortgage rates and lack of consumer buying home. But I've started to see a closing of the gap from this reversion effect. So, for example, travel is still strong, but it's not nearly as strong as you saw, let's say, early last year. You're still seeing people wanting to go traveling to Europe. You're starting to see it reverting. I'd say we're getting close to the point of medium back to the norm.
So the strong results we got from Walmart today, the commentary from CEO Doug McMillon on the state of the consumer, what was your takeaway and what is the read-through then to other retailers?
Well, I'm a little bit concerned. I thought that the Walmart numbers were superior. Really, they did a fantastic job, and they showed that their business is very strong. And the consumer at 2.7% or so is healthy. Walmart is winning. They're executing not just in terms of the low-end consumer, but higher-end consumers are going to them. Their marketplace is strong. They're innovating in areas like fashion and apparel. And so I think that there's a lot of share growth going on. Remember, they're very heavily grocery. They've done a lot of price reductions. And then you see their strength in their discretionary businesses like the apparel emerging. So they're a share winner, but I think they have a very strong business. But I'd be a little bit hesitant to assume because Walmart did well, all the retailers are going to do well. You mentioned the Dillard's numbers. Dillard's was very disappointing. So you've got all of the department store sector brands. Macy's will report next Wednesday. I don't have any idea how Macy's will be doing, but I wouldn't assume that because Walmart had really good numbers, that means that everyone in the retail sector will do well. I saw electronics did pretty well today. You're seeing the last couple of months, electronics have reemerged doing much better. You're starting to have an innovation cycle with some of the AI-based computers, with telephones. So I would expect to see some of the electronics retailers holding up quite well. But I would just be careful. I saw it, markets had a remarkable day today in the retail sector. I'd just be a little bit careful assuming that, hey, we're off to the races.